Hi guys, I'd like to talk about futures compared with options and the reason. Right, so I was trading on Asian Paints 2 days back, right, on 25th. You can see the time here at 3:15. All right, so I had sold somewhere around with this candle. Is this Haikanashi? Just a second. Okay, so I had sold somewhere around this price on the futures chart. Okay, and I was waiting for me to come in profit. I think I'd sold a little earlier, maybe about around somewhere around 2 o'clock. By about 3:15, price starts to drop a little bit, and at 3:15 my trade gets closed automatically because it's an intraday trade. And just after that, you see the market dropping from 1365 all the way till 1350. It made a spike, all right, and then it did come down, but I could not make money from this move because my trade was automatically closed with intraday. Now, if I were to hold that trade for the next day, I need a much higher margin, all right, and obviously now it's coming to an expiry, but I should have made money. I could have gotten out at a much better price, which is why I feel trading on the options market is much better, because first, your margin requirements is lesser, and second thing, you can hold on to the trade. You're not forced. If you want, you can close the same day, else you can hold on for the next day. So now let's see how we can actually trade futures. It seems complicated to a lot of people, but when I started to do it, it's actually quite simple. Now, first of all, you need to understand the direction in which you want to be. Now, looking at this movement on the weekly, where I can see price bouncing up from one of my favorite moving averages, and here on the daily chart, I can see we have good reasons for an uptrend. Those who've taken my class know what I'm talking about. So now I want to be on the buy side of Axis Bank. If I were to buy the stock, I need to have a lot of margin to be able to buy 1200 shares. If I were to buy futures where the lot size is 1200, the problem is that I need a bigger margin, or I have to close it the same day. But when I go to the options available, and the best option is the call option, all right. So I go here, I search for the premium of 800. Okay, how this works is, see, we are looking at current price are about 798. So when we are looking at options, we want to buy a call option. Call options mean that you will make money from the upward movement of the underlying stock. So we go here and we search for Axis Bank 800. 800 is the strike price. So you have to be as close to the current price as possible. Okay, it could be 800. You could take it as this moves in multiples of 10, 810, or you could take 790. Okay, so let's say this means the option will expire on 27th of June. So we are taking the 790 call option. We've added it. Then we've taken the July option. Okay, and let's also take the 800 one. This is for June. Okay, July, and this is for August. Alright, now let's just compare. So the one which is for 800 call expiring in August, there are no trades on this, right? Like we haven't got any volume on it. So this is all zero. It's not really moving. If you want, you can see the chart. There's nothing. It's a blank chart. Okay, so we remove this. Now these are our options, or choices rather, so that it doesn't get confusing. Axis Bank, 25th of July 2019, 790 CE. Alright, this is a chart. People have been buying this, and this is how it is moving. So if you were to buy now on this chart, you will buy at a premium of, this is the price, this is your buying price, 29.69. This is where you will buy. Alright, and since this lot size is, okay, I'll explain that later. Now the other option, or the other choice that we have, is Axis Bank 25th of July. See, 27th of June is also there, which is expiring today. So this option, if you see the chart, it is moving up. You can buy it, but you have to close it today. Okay. And what if Axis Bank takes a little longer to reach a higher price instead of having it one day? So the way it works is, the longer you hold on to the option and the more this stock moves in your favor, the more money you make. Okay, we'll get into the calculation in just a bit. So here, if you see, we choose this option of Axis Bank 25th July. So that means until 25th of July, we can hold on to this trade. Okay, we don't have to close it, and we are going to be buying it at this current price. Today it has moved up 5 rupees. So we load the chart. This is our current chart. Alright, this is the movement that you see. It has moved up 5 rupees. It opened here and it has moved until here. Maybe we'll move to candlesticks so that you can see it more clearly. Alright, this is where the market opened. There was a one big candle, and after it went up. So I took a buy around this price, I think. What I did was, see, this is the first time I'm trading on options, but because Axis Bank was going bullish, I took a buy at Axis Bank 25th July 800C, which means my strike price was 800C. Alright, so I'm expecting price until 25th of July to be above 800. Although I have the choice to close my trade whenever I want. Okay. Now, since I bought at 22 rupees 75 paisa, which was my premium price, premium at which I bought somewhere around here, and the lot size is 1200. So it has moved up. You can see there's a profit of 1500 rupees, which means I'm up by around 1.5 rupees. So 24, my buying price was 22.75. All right, so which is why I'm making 1500 profit on this. And same thing, Nifty, 4th July contract, which means it's going to expire on 4th of July. I bought it at 11,900 call, which means my strike price is 11,900. Alright, currently you see Nifty is going up. It has not crossed 11,900, but from the time the market opened, the premium is up by 9 rupees 35 paisa, which is 12%. So 9 rupees into 75 is 660. I mean, this is fluctuating, so this is the actual value. Right, so I hope this makes it clear that the risk that you have, also the margin required for today's trade on Axis Bank was 27,300. So with this margin, I can hold on till 25th of July. Okay, so my risk is much lesser, my margin amount is lesser, and I'm more at peace because this is not going to, even if it starts to fall, I know that there'll be swings, but I don't expect the premium to come exactly from 24 to 0 overnight. And that is when I'm going to lose my 27,300 completely. Okay, so I can manage my risk much better. You can see I'm already in a floating profit of 3,000 rupees, and this is the first time I'm trading options, right? But it's a really good instrument, and I would recommend future traders to switch to options because your risk management will be much better. And you have the option of doing intraday as well as long. If you want to hold on, you can go ahead and hold on to the trade. Okay, but this is just about buying call and put options. Okay, there are lots of other things to options, so we'll keep that for later. But for now, let's keep it simple. Easy way to make money from the Indian market. I'm open to discussions or suggestions about this. You can email me or you could post your comments. I'll be changing a little bit on the analysis videos that we're getting. We'll be using moving averages also in our analysis from now. You guys know my favorite strategy is 1362, so I'll be using that for the analysis along with our Bollinger and Heiken-Ashi looking at entries, and we'll be looking at more of trading on the Indian market through the options instrument, as this seems most lucrative to me. Right? right? That's it for now. See you guys soon. Please make sure that you attend the live sessions which we have having every month on the last week of every month for free. Today is the last one for this month, which is being conducted by Sneha from 8 p.m. to 9 p.m. Right, that's it for now. See you guys. Bye.